Hi everyone, let's look at my medium time frame and low time frame Elliott Wave scenarios on Bitcoin, including potential trading setups, starting with my preferred medium time frame scenario where I'm looking for a three-wave structure to the downside in an ABC, which basically means that this first structure over here is then a 5-wave move in a wave A. We're looking then for a 3-wave move in a wave B for then continuation in an impulse in a wave C. If we then zoom in to this wave B over here, we are looking, as mentioned, at a 3-wave structure where an interesting target area for a bounce is the white box over here, and then a 3-wave structure over here, a WXY in this blue XOR for then continuation to the upside. Now the white target box that you see is currently sitting between the weekly and basically the triple bottom, which is between 27.6k and 27.2k. And price can either, of course, reach it in 3 waves as we're looking for a wave Y like this and now continue to the downside, or the waves are going to be a little bit bigger also in time because wave W and wave X are quite a bit longer than the length of wave Y at the moment. So maybe a bit of a bigger 3-wave move would work as well. It doesn't really matter. All that matters is that this target area over here could be quite interesting for a potential bounce to the upside, where we have a weekly. We also have the 886 in this same white box area taken from the low of A to the high over here. We have the 1-to-1 taken from the high to the low of W to the high of wave X. And we also have a triple bottom with the lows that are made over there for maybe a bit of a liquidity grab and then upside to come. But not only that, we also have the range value area low, and that is the range from where we are right now all the way back to the 17th of March. And if I now click, you can see the volume profile is shown, and the value area low of the volume profile of this whole range over here is sitting at basically exactly the same level as the triple bottom. So if price is going to break the point of control over here and actually find more downside, it might even backtest the point of control before then maybe going to the downside and hitting that range value area low, which is quite common. So you can see that in this range, price has basically been ranging to the up and the downside, bit of an outside parkour over here, but then it came back to the downside, to the upside, like it's always ranging around that volume profile. So it could be some interesting confluence at the white box as well to then hit the range value area low, which is at about 27.2k. Now the potential trading setup that I have over here is to enter a long in this area, stop loss safely below, and then looking for a long to the upside, where the target area then for this wave B can be seen over here, which is quite big, and it is between 30k and 32.4k. Now the trading setup over here, of course you have the risky and the more safe setup, I suppose, where if price goes to the downside and hits this target box, the risky move is to just enter, stop loss below, looking for upside. However, the more, I guess, safer option is to wait for some sort of support or some sort of a reaction. Now, of course, you as a trader, viewer, have your own plan, your own strategy. I'm not a financial advisor. We're on YouTube, so you have your own stuff going on, of course. But for me as a trader, it helps to see a little bit of support, whatever you like to see, before eventually entering a potential long for then the upside. Because if price is just going to do that, I don't like to be stopped out in just a minute time. So that being said, looking to the upside, as mentioned, this wave B target box is quite big. What you can see is that we have a triple top at 30k, which is the high over here, the high over here, and the high over here. We also have the target box, which sits between 30.2k and 30.4k. We have another high, the 31k high, which is also the invalidation for this being a 5-wave move, and this then being a 535. So if price is going to reach the 31k high with this wave B, it cannot be a zigzag anymore, which is a 535 wave move. And all the way up here, we have the 2022 range highs. Now, the reason that I put another or I guess the target box is reaching all the way to 32.4k is just in case this is a 3-wave scenario. Because if this is a 3-wave move to the downside in a wave A, then a 3-wave structure can be an expanding flat in then a 5-wave move, and then the expanding flat target in an ABC is the 2022 range highs basically. So that is the reason why I moved the target box all the way to the upside to the 2022 range highs, just in case, because if price here is bouncing and would move to the upside, we have to wait and observe how price is going to move to the upside, right? So that is quite interesting. And then of course looking inside this wave B target area for then a potential reversal to the downside. But let's wait with that scenario and everything talking about more downside the moment we actually reach that area, right? So we have to wait and see what price is going to do. If we then go to the low time frame scenario supporting this. So we're looking for a downside, right? We currently have this range over here as a WXYXZ, and the whole reason that the medium time frame scenario that I've just shown you actually exists is because of this range, because this range over here has to exist in either a wave B or in a wave X. So this has to be the middle of something, and it's very likely that this then is the beginning, this is the middle of something, and we are then looking for another move to the downside, like quite similar, right? So that is the reason why I'm looking for a bit more downside in the medium time frame scenario with the target box here as well. So because of the WXYXZ over here, which respected its targets very, very nicely, where wave Y hit the 1-to-1 trend-based fib extension of the low of W to the high of W to the low of X, and also wave Z hit the target for wave Z, most common target, beautifully, the 1-to-1 taken from the low of W to the high of W to then the low of X. So that is actually very, very nice. And then looking to the downside, we are looking at a wave A, B, C preferably, which then is a three-wave move, or so a wave A, and then it has to be a zigzag of some sort in this case. Then we have a wave B or a wave C or a WXY. It's actually looking to the downside. I tend to label three-wave structures in an ABC, but actually this cannot be an ABC. The reason why is that an ABC is used for a zigzag, which is a 5-3-5 wave move, or it is used for an expanding flat or a flat structure in general, by the way, where usually the high gets taken, which is not the case. And also counting this, if we go to the 15-minute as a 5-wave structure over here, it's not that easy. It looks a lot better as a 3-wave structure at the moment, which would mean it's more like a WX and then eventually a wave Y, which means it's a 3, 3, and then looking for another 3 to the downside. Now we have to wait and see, of course, how price is developing. Another, I guess, alternative that I have on my chart at the moment, just in case, is that this is somehow still a 5-wave move, in then a wave 1 or a wave A, of course, in an ABC, but then also in a wave 1, followed by a 2, and then potentially we have another 1, 2 over here for then a bigger 3 to the downside. This is not preferred, but I do keep it in mind just in case. Let me actually remove it to keep the chart clean. And yeah, the target area, we just have to wait and see what price is going to do. If it is going to reach this area over here between 27.6 and 27.2, we have to wait to see how it is going to interact with this area for then a potential reversal. But yeah, looking for a 3-wave structure, and as you can see in this wave Y at the moment, this looks like a 3-wave structure. But this can also only be the beginning of a 3-wave structure followed by another correction, because we do have a double top over here now between this high and this high. So of course price could maybe eventually reverse, take the liquidity, and then move down to reach this target area. Then the wave Y will take a little bit more time, which is perfectly fine. Now if I do open my target boxes, you will see that currently price is at a support area over here, where the target box is between 28.2k and 28k. So far price has wicked into this area twice now, finding some support. So we have to wait and see how price is going to interact with this area over here for maybe a little bit of a bounce, or maybe this is then the 3-wave structure followed by another corrective move to the upside, taking the highs over here, taking maybe even this target box all the way up here. It would be pretty high though, but you never know. This target box is between 29.6k and 29.7k for then maybe more downside, right? Oops, move to the downside. But then again, like, we don't know what price is going to do. That's also why I don't have any trading setups over here. I prefer to wait for more clarity on the medium time frame count that I have. Now, if we then zoom out for a second and show you the bullish scenario that I have, which is an alternative scenario. So the bullish scenario basically means that this is a 5-wave structure, but it is not, as in the bearish scenario, an A and then looking for a B and a C. But now this 5-wave structure is a wave C. It is the end of something and not the beginning of something. And if this is a wave C, and then this being an A, B, C, it also means that now you can find more upside in a 1, 2, and then a bigger 3 to the upside. So if I actually go to the 1 hour, because the chart looks a bit cluttery, there we go, much better. Then this is the low of wave C. Then this has to be a wave 1 over here, followed by a wave 2, and then we're looking for a bigger 3 to the upside, right? Now there's two problems that I have with this scenario, which I'll also explain on the medium and the low time frame. The first one is that over here, if this is a wave A, B, C, then wave C did not take the low of this wave A, This looks very impulsive, but actually it's very difficult to count a nice 5-wave structure in here. So what you can also do is remove an ABC and just put this as a WXY, and that would actually work. So let me actually keep this on the chart, right? So then we have a 3-wave W, then we have a wave X, and then this has to be a 3-wave Y. It looks impulsive, to be honest, this move over here. It doesn't look like a 3-wave structure, so that's also pretty awkward. So this structure, just in general, for a bullish scenario is very, very weird. Now, after then the low, so let me actually just remove this count as well. It's just a weird structure in this scenario. So then this has to be the low of wave 2. Now we did have bullish divergences over here, when then usually the target is the high of wave 1 at 31k. So that is the one you want to see taken. But then after this wave 2, we create then another wave 1 and then a corrective 2, where the invalidation is taking the low at 27.6k. So you want to see price reverse to the upside before it is going to reach this area over here, right? That is very, very important. But then also this potential blue wave 1 is not looking very nicely, because then this structure over here has to be a leading diagonal. So let's go to the lower time frames and explain why that is less likely, right? So if we actually, let's go to the 1 hour actually. Now we're looking at this structure as a leading diagonal. So we then have a 1, 2, 3, and then a wave 4 and a wave 5, and then that bigger one, right? Because we're looking for upside, 1, 2, and then a big 3 to the upside. Where this corrective structure is then an ABC, WXY, doesn't matter. It's a 3-wave corrective structure hitting the target box for then more upside. You don't really want to see price go below the target box and close candles here, to be honest. Usually my target boxes are very well respected. So in this scenario, we are then looking at a 1, 2, 3, 4, 5. The problem is this wave 4. So in a zigzag wave, leading diagonal, I should say, in a leading diagonal, wave 1, 3, and 5 can either be a zigzag or an impulse. Now in this particular scenario, it's an impulsive structure. So 1, 3, and 5 are impulses. The big problem, however, is wave 4, because in a leading diagonal, wave 2 and wave 4 need to be zigzags, which is a 3-wave move in a 5, 3, 5, where the origin of the move of that wave A and then an ABC is not allowed to be taken by wave B. But that's what happened in this wave 4 over here. This move is too short for a zigzag structure. But if this is then a 3-wave structure, then the wave B over here took the high of wave 3, which is not allowed. So this being a leading diagonal is actually low probabilities, but I do like to keep it on my chart just in case for the bullish scenario, because as an Elliott Wave user, you always need to think of a bullish scenario besides your bearish scenarios to make sure that you are not biased into one direction, right? You can have a preferred scenario, that's absolutely fine, but you always need an alternative scenario as well. You need a bearish scenario, you need a bullish scenario, but make sure you have a preferred and an alternative scenario. And as I mentioned, my preferred scenario is actually still finding a little bit more downside. So I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video I made yesterday if you're interested. For now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.